Hey everybody, Brian here, quantlabsnet.com. In this video, I want to show you the corrections that I made over the last little few days. Today is November 11th. I do believe this is probably the best downloader I can get for futures data. Let me show you that. This is from Rhythmic, as I have been talking about for a couple of weeks now. This is the data that I refer to. This is just this morning, again, November 10th. Okay. So here we have basically 47 assets that were pretty well downloaded. You can see the volumes are pretty high for them. Not a lot, but these are the important instruments for futures market on the CME, Chicago Mercantile Bank, sorry, Chicago Mercantile Exchange. As with the news today, the US government shows signs of shutdown, so the markets are starting to pop now. It's been very iffy with the last couple of weeks. So I'm going to show you it's been a down day or down period since October 14th here. So let me show you our application here. So this is the same dashboard I showed my last video. You can see here all the data I've loaded in from today, November 10th. And these are the outcomes. So right now with the portfolio out of 48, I'm assuming, or even 20 plus, whatever it is. Annual return is, total return over the last couple of weeks since the 13th. There's only been two positive assets. So we're looking at micro gold and Dow Jones. Um, the Sharpe ratio is another big one that can be factored in. So right here we only have three. So we have the Russell, YM, I believe is the Dow Jones, and gold again, all micro. They've been positive since the 13th. So I can look at these in various ways. Um, and let's check out now. Remember, this is using, so let's say if I wanted gold, these are the price performance using all the popular different technical indicators. Again, this is real data, uh, minute by minute data since October 13th. So here you can see the volume has kind of dropped off quite a bit. And we have a buy and hold here in this dash blue. And then here it's a typical moving average cross strategy that does outperform, but it looks like gold is coming back here with this big spike here, make crossover strategy. And here again, if you're using the moving average, a very simple strategy, that can generally work pretty good. Um, yeah, it's a pretty good little system, I think, or dashboard, what you call it. And this is again portfolio metrics. Okay. So here, total investments, so we only have the two here, micro gold and micro Dow Jones over that period since the 13th, 14th of October. Yeah, so it's almost close to a month. So we have here a Sharpe ratio, again, micro gold and the Dow Jones were the only ones that formed fairly well. Um, and then we have, as again, max drawdowns is what matters here. So we can look at that analysis. So again, with the strategy ranking, this is important. So if you're just to use a simple moving average, if it's Bollinger Band, RSI, or moving average, you'd still be doing okay. And the M2K, that's the euro here, M2K. I just can't remember which one that is. M2K. Uh, but you see here we have Treasury, yen, and Swiss franc, all performing using these simple strategies. So it is a tough market out there, I'm not going to lie. Um, so total return is very small. As you can see here, I think that's fudged pretty bad or hallucinated because this is generated by AI, as you know. This is the important one, the walk forward. So from what I'm seeing here, based upon what this is saying, the one with the most potential is using oil. UB, I believe, is uranium. I can always check that. Let me just see here. Oh, yeah. So we've already covered that the markets are fairly positive. And as I said before, people are going to ask why no cryptocurrency listed here. It's simple. With my connection using EdgeClear, the futures broker, um, with Rhythmic being the provider, data provider, from what I understand, well, again from my AI, that combination does not enable you to have access to the CME, crypto, Bitcoin, Ethereum, and same with XRP and Solana on the CME. So they do not allow you to get access, only conventional futures without crypto using Rhythmic. There are some brokers that will give you access to crypto via CME via Rhythmic. That's using AMP, AMP futures, so that can be used. Now, one thing I can say, if you are with EdgeClear, they do have Coinbase derivatives. That's a very small subset of trading on Coinbase for crypto, small amount of coins, but it is pure perpetual futures and options and all that. That is sanctioned and approved by the CFTC. So if you want to do real futures trading outside of the CME, you can also use the Coinbase futures market as well. So I'm going to focus on that in coming weeks to months. Right now, I want to focus on this on the traditional future stuff because my next big step is now to start testing orders through Rhythmic using their API. So continuing here, you can see CL and UB. Let me just, as I said, verify this. So if I actually, oh, I got it right here. So I'm using uh, TradingView. Um, Now I'm going to pull up the first one here. Now this is again using real market data. So let's check out what UB is. Um, so UB, interesting. Okay, so I don't know what UB is. Let's see here under futures. Oh, so sorry. So it's the Ultra Treasury Bond Futures. There was another one in there, I believe it was M2K. Was it? That might be. Yeah. So the M2K is a micro for the E Mini Russell 2000. Okay, so that's what that is. All right. So these are your performers for the next month or week. Now, how can I confirm that this is the case? So if I was to go back to let's say well let's pull up the E-mini for the Russell. So here, if I did a 5 day, you can see here coming from 2391 all the way up to 2470. That's a pretty decent spike. So there is some momentum there. Let's see if there's the CL is another one we can look at. Again, from my point of view, on a 5 day, that's pretty choppy. You can see that general downtrend as well. Now, when I kind of take that, it's possible. You can see here, it's did spike from 56 to 61, but there is somewhat of a downtrend there. Now, I don't know. This is obviously a news item that spiked that. So I'm not sure if I would go with that trade. Um, and the UB Z. Let me just pull up the UB Ultra Bond. That's probably a short term, I believe. So again, same thing. It's declining and whatnot. But what you'll see here is we're starting to move into some of the Nasdaq and MGE. So let's check that out. NQ. Let's see what this is. Again, it's just looking at data, looking for trends, and looking for processes. So you can see here a pretty decent spike um, from 24,700 to 2655. That's a pretty good spike. So there might be some solid momentum there in NASDAQ. Gold as well. Let's check that one out. I have talked in the past about gold getting killed about 2 weeks ago, 3 weeks ago. So you can see here gold is on a rebound. It looks like, yeah, you can see it's a nice rebound, 39, 36, 40, 42. So it's climbing again, which is good. So as it stands right now, gold is something I'd be interested in. M2K, again, that is the uh, Russell. That's a fairly cheap uh, index or futures to get, margin requirement, that is. Um, so some of these look pretty valid. Another one's silver. And again, this is forward looking for the next month. Okay. So these are the ones it's recommending based upon all the momentum. Silver's looking pretty good there from 46 to $50. So it's all good. Now, everything also depends upon news. Now, there's a couple things that we need to take a look at here. We have here the you can see here, this is the big headline. Democrats could see shutdown fight with healthcare win in hand. So they've allowed the government, US government, to advance to eventually open up uh, the government in, I don't know, coming days, coming weeks. I don't know. But you can see the markets have responded. This is another very concerning headline for markets. Buffett will no longer speak at Wright annual letter, speak at Berkshire meeting. A couple things on that means he either is thinking that the markets, something bad will happen to the markets, or he's just getting, he's in his 90s, so he's probably getting sicker. I don't know, but it could be interpreted many different ways. One thing I want to show you here, I think it's important in the groups. If you were to sign up for my trial here for my 7 day, uh, 7 day analytics membership, I'm treating this more like kind of like a journalistic assessment from an investor point of view. This one that I just added this morning, a couple of things here. So this headline here, with all the news related around it, impact on crypto, impact on pretty well everything else. This analysis, which I try to do every day, will tell you exactly what to look for in the markets. Okay. So a couple things here. Now I can do a long view or a short view. This dashboard is going to confirm everything that I'm seeing. Okay. It's specifically on the walk forward analysis using real world data among all the major assets out there. Official, real data. I got to add that. Here, as you can see, we can measure out the markets both by composite score that's built around momentum, Sharpe ratio, or total return based upon obviously the past momentum and what it thinks will be moving forward. So, depending upon which you prefer, there's also a profit factor here. This is the one TradingView uses for their strategy assessment. It's pretty good. But here we've got more than that as well. So anything over two is considered pretty good according to TradingView. A strategy with TradingView, uh, profit factor two or more is good. From an industry institutional level, anything with a Sharpe ratio over two is good. And then we have the total projected return. So max drawdown matters as well. And these are all portfolio from a portfolio perspective as well. Portfolio perspective from a max drawdown is you want minimal max drawdown. And then with the win ratio, those are obviously the higher the win ratio, the better you are. So for instance, if I went with the higher win ratio using this data, and again, this is minute data, minute time frame, not daily, not 4 hours, minute data. Very important to know that. You can see here we have a much higher uh, ratio metric to go with on the win ratio for projected views. So obviously, when you're using max drawdown, that's going to be very low and low volatility, depending upon something like Treasury or even currency. Um, But lately, I have seen the Treasury have some much higher volatility. I just wrote an article last week on, well, no, I didn't. The AI wrote when the markets were really bad, the things that were looking better, just as a um, from a from a higher level. So the first one to know is about the private coins are moving. Okay. So right here, we have stagflation kicking in. So the ones that might move over the next few months, if things did blow up, let's say markets, the whole 9 yards blew up, the things that will probably still move in the futures market will be these soybean and corn for the US, with that new agreement that China signed. Their big purchases, big wowza, big surprises, extra soybean. And Trump think that that's a big victory. But the one that you got to watch here is the VIX. Okay. The VIX is what you got to watch for. So, for instance, again, uh, with the VIX measuring volatility in the market, let's see here. So, uh, Russian market. Okay, so we have the CBOE volatility index. You can see here, the last, let's say, 5 days, this has spiked. Okay, that's spiked quite a bit. Um, and it was climbing. Okay, meaning there's more volatility in the market. That's drastically come down, and I think a lot of that has to do with uh, the U.S. government shutdown, calming everything down. But when you look at a 5 month, okay, you can see that steady VIX has been climbing, huge drawdown here. But you can see here a big spike, October 25th. And then you can see these big sudden spikes of VIX, uh, October 25th. Let me just pull up a 3 month chart. So you can see here, our VIX has been climbing. Okay. So in around here for all you Bitcoin, or sorry, gold lovers, gold bugs, you can see here, in around here is when they brought down the price of gold a lot, like 10, almost 10% overnight. I call that an operation. You can see here, that it has been climbing excessively, October 17th. And then a few days later, gold all of a sudden drops in value. And then it's been spiking in. So generally what I'm saying is that we're hitting high periods of volatility immensely. So when you look at these two articles found in the this group here, our private group, Quant Finance Group, that tells you VIX and volatility is spiking quite a bit. And the only things that may be going to give you okay performance outside of currencies and maybe short-term treasury will be the agricultural space, soybean and corn. Now, one thing I want to mention here, and I think this is important that the AI did highlight here, everyone's going to say, "Oh, well, you could be in the ETFs for both corn and soybean." Well, this one is very important to understand. What this AI has mentioned, it has to do with there's a delay in the world of ETF. Okay, this is why I like um, being in the futures market and options market now because of this. Um, and let me just see if I can find it. It doesn't matter, but just be aware ETFs and gold and soybeans not your answer. Uh, so there's that. So there are concerns out there, but there's always a spike of good news that come in, um, and I think the markets are trying to highlight that more because I can tell you that the news is um, definitely manipulated. And I say that when you go back to this article I did post today, and again, it's this type of dashboard that's been built as of today that kind of works. This will tell you that this works, okay? Because if I look at the Sharpe ratio and judge everything by the Sharpe ratio on what's moving, you can see here we got some currency here on the euro. Um, and then we've got 6S. Yeah, these are all currencies. So those are moving as well. We also have moving the Treasury 10-year. That's corn in itself, I believe. ZC. Let me just verify that. I'm pretty sure that is corn. Um, yeah, so that's corn. So you can see here, everything's this dashboard built by AI, by the way, is 100% correct. So everything that's going to move, if things do crash because of the volatility, as I shown with the VIX, I do think the ones that will protect you is going to be agriculture, currencies, and somewhat treasury for the time being. You can see here, based upon the composite score, we have here the euro, we've got here the Swiss franc, the yen, treasury, foreign, Canadian dollar. I think that's a Mexican peso. That's the Australian dollar. And then ZB, I believe that's another duration of treasury. So this is why I'm very happy to be doing what I've done and what I've built out, and to know um, what I've got here in terms uh, of defensive, because we all know. Yep. So here T bond futures. Okay. So again, if you look at the 3 month, it's spiked. Okay, and there's going to be some performance there. So these are the worst case scenario. Okay, so we got currencies, we've got one agriculture, we've got that will perform no matter what happens in the market. So we can still participate in this space. Now, if you're on the retail forex expecting that to save you, I highly doubt that will, because of the corrupt retail forex brokers that I've talked about in the past. Again, here we've got here what could move is again, this one's a strange one, oil. So if I check that out just to see how it's performing, I wasn't convinced that this is accurate or not, but you can see it did spike, as I said, and it's trending down. So again, I really don't know what to make of oil. The Ultra Bond was the other one that shows some strength here. And again, this is 1 day. Yeah, so the 1 day might be pretty good. So if I'm trading on the minute, maybe it might be a decent one, a 119 right here, all the way up to 120. That's a decent little spike right there if you can catch that in the futures market. Uh, so you can see here, these are pretty good. Now, the NASDAQ, strange as it sounds, let's see how this one's doing. Um, right here, you can see it's kind of recovering again, but it's that crazy revenue. Sorry, that crazy volatility that's driving this. Again, this is intraday, so if I look at the 5 day, it has recovered pretty good. Okay, so there might be some growth there. I'm not sure, but you got some pretty good diverse ones here, and some currencies as well. This one's the interesting one on the British pound. So if I was to look at the British pound here, um, this might be an interesting one. You can see here, again, this is, I believe, a 5 day view. So it's doing pretty good. The 1 day, again, spiking, highly volatile. Again, but my point here is that this dashboard seems to work pretty good, with a pretty good gauge, just depending upon what you want. So let's say a profit factor. Um, so anything over 2 would be pretty good. Um, so again, we got here the MXE, which is strange for euro. Sorry. So that's a mini micro euro as well. So if I go into the day, yeah, see, it's very volatile. Um, I don't know if I trade that, but it's a very good guide. That's all I'm trying to point out here. Anyways, that's what's been going on. Uh, so what's going on right now? As I said, if you go to quantlabsnet.com, if you want to join our email list, you got to engage with it to learn about a lot. Meaning you got to click and open stuff that we send you. And right here is how you join, get our free C++ HFT infrastructure book, I guess, call it. And then, as I said, just go under here into trial or try, and that will give you access to this group I'm talking about. Also, one last thing that are on my email list. We are starting our Black Friday now. Right here, the Black Friday. If you looked at uh, the public pricing, it's 2,000 for the elite annually. But it's right now 75% off until Cyber Monday of 2025, which is like December 1st, I believe. But you can see here, I go on about that as well. Now, I will provide the source code for this. Again, that will be part of my Quant Elite. I'll also put in the downloader uh, with this as well. Um, this is getting pretty good. I think as good as it's going to get with the data from Rhythmic on the futures, and that's what generates this. So I'll be able to provide the latest changes to the dashboard I showed in my last video. Actually, the code hasn't changed yet. What am I saying? It's this one that you want, the downloader. Okay. So yeah, that's why this is becoming more valuable because I'm at a point now where my next phase is to start testing the orders and see the automation, the orders take place. One thing before I forget, um, always, if you want to know what's trading by volume, up or down, this is the thing I would tell you as a trick on Google. Uh, you just type in this keyword, most active futures or bar chart, most active all futures. One thing I want to highlight here is what's moving by volume. Okay. This is important to take note on. So here, you can see what's moving. Okay. So what's happening is Ethereum's getting up there now and it's micro. Okay. Uh, and then you can see what else is moving here. It's all the treasury. That's because it's going defensive. We've got the overnight euro rate on the SOFR. This is the former LIBOR. NASDAQ, gold, key bond, oil, as I said, is moving up. Corn, as I said before, the Russell, the euro, soybean. So that's currently what's moving. And why is it moving? Because everything has gone defensive, as I hinted in this video. So it only confirms what I'm saying that stuff works on real money in the futures market. This is what real large institutions are buying because this has to be regulated. So all this data is public. Um, and you can see everything's gone defensive. So right now, what this tells you is that the traders and the institutions are already lining up all their defensive trades, no matter what the U.S. Uh, market says, or so the government says, if it shuts down or not. Basically, it's telling you that that's a very short-term pop in the market. Everything long-term is staying. Everything's staying defensive. Again, let me show you here. We got uh, some of the markets here moving by volume in the millions. But when you start to see the Tino, the um, the currencies and the different treasuries moving in by volume, that's the positioning a lot of the uh, institutional traders are lining up with. They probably will continue to trade the Nasdaq and the S&P. Um, if the markets do go down, obviously they're going to go short. So that is for sure something that most likely would happen. I don't short. I just find it too risky at my level. I just don't have the stomach for it, nor do I have especially with the VIX going up and down as shown. So this is important just to know what's going on. All right, so we'll leave it at that. And thanks for watching. Have a good day.